be here. Jamaica is a very important country for our bank, just as it is for the entire region. It has been a pleasure to serve as your chairman, and I have every confidence in our team's commitment to work with our customers through the current economic challenges and continue to be a significant partner in Jamaica's growth and development. Scotiabank will continue to bring the many strengths of our organization to our customers along with the best possible solutions to meet their financial goals. Thank you. And I would like now to share with you a short video of our Community Voices project, which features young local musical talent with stories of the charities we support and the bright future employee volunteers who are involved. Thank you.
Jamaica, where?
Imagine places nicer than the biggest spots.
Sun that shines, but it's not too hot.
All the wind that blows straight on through your hair.
Smiling faces when you are here.
Talking about the people, yes, they're all so nice.
Feels like heaven, you're in paradise.
And above all this are the sweetest scenes.
Come with me, show you what I mean. Welcome to Jamaica, to Jamaica. We love you, we love you, love you.
The Street Smart, Street Safe program was initiated by Scotiabank with the aim of providing information and tips to our kids about road safety and their protection as they commute to and from wherever their destination.
Scotiabank, they have been in partnership with the Police Traffic Division since year 2002. And since that, we have made significant impact in the reduction of road fatalities. Our operation is island-wide. We have sent our police personnel from the road safety unit right across the length and breadth of Jamaica. And we have lectured to well in excess of 5 million children so far.
I've learned to cross the road safely, to be careful, to alert those who are driving so that I can cross. I've learned to look right to the left and to look right again. As the song says, I've learned how to cross the streets and to know what I'm doing is right.
I love the music. Maybe we should play that again. That's very well done. The President and CEO's report will be presented in two parts. The Chief Financial Officer and Chief Administrative Officer, Ms. Jacqueline Sharp, will review with stockholders the company's operating results for the past year, and the President and CEO, Mr. Bruce Bowen, will outline the group's strategy. I now invite Mrs. Sharp to the podium, followed by Mr. Bowen.
Thank you, Mr. Chairman, and good morning to everyone. It is indeed a pleasure to be here in Montego Bay and to have the opportunity to present our 2012 financial results to you. Despite a challenging year characterized by a weaker domestic and global economy and a highly competitive environment, we posted net income of $10.575 billion for the year, which is slightly below the $10.618 billion posted in the previous year. As a result, our earnings per share was $3.26, down slightly from the $3.28 in the prior year. Our return on equity in 2012 was 16.11%. While this was down from the previous year, this return provided a significant premium over benchmark interest rates, which averaged about 6.5% during 2012. Total dividends declared for the year increased to $1.51 per share, up from $1.48 per share in the previous year, as we continued to provide a steady stream of income to our shareholders. Our diverse revenue streams allowed Scotia Group to post record revenues in 2012, as all our business lines met or exceeded their revenue targets. We posted total net revenue, excluding loan loss provisions, of just over $32 billion, reflecting an increase of $1.6 billion from the previous year. Our net interest income, represented by the purple bar, increased by $526 million year over year. Careful management of our interest expense and the increase in loan volumes of $22.5 billion year over year helped to counter the impact of lower asset yields as lending and market interest rates continued to decline throughout the year. Our other non-interest revenues, represented by the red bar, increased by 13% year over year to $9.1 billion. This was due to increased loan fees stemming from the loan growth that we experienced during the year, as well as increased commercial and depository fees and retail banking fees. Turning to loan losses, we continued to see an improvement in 2012 and are happy to report that losses fell by $540 million, or 39%, when compared to the losses in 2011. This resulted from sustained efforts to proactively work with customers facing challenges, tight management of our non-performing loan portfolio, and continuous enhancement to our loan underwriting policies. Turning to other operating expenses, we saw an increase in our total operating expenses of $1.5 billion, or 10%, when compared to 2011. Staff costs were $8.5 billion for the year, increasing by only 3% over last year, and this was due to continued tight management and effective use of our resources, counteracting the impact of the contractual salary increase which took effect at the beginning of the fiscal year. Other expenses went up by 20% this year to $7.8 billion, reflecting primarily the new tax measures announced by the government in May last year, increased legal provisions, and increased investment in business growth initiatives. Despite the increase in operating expenses year over year, our productivity ratio at 53.69% is well below our major competitors and also below international benchmarks. Turning now to business line or segment performance, all our business lines performed well in 2012 and provided strong contribution to the group's results. BNSJ, the banking segment, is currently the largest contributor to the group's net profit, with a 48% contribution, up from 44% last year. This resulted primarily from increased loan volumes and fees, reduced loan losses, and increased foreign exchange trading income. SGLIC, our insurance subsidiary, currently contributes 28%, down from 36% in 2011, due primarily to lower asset levels after large dividend payments to BNSJ during the year. SGLIC continued to record strong growth in insurance core business, with record premium revenues posted in 2012 and a strong return on equity ratio of 30%. SJBS, our retail mortgage provider, reflected increased contribution from 6 to 7% due to strong growth in the mortgage portfolio year over year as we continue to take market share from the competition. Our solid and consistent profitability over the years, coupled with prudent capital management, have enabled us to maintain strong capital ratios in all our business lines. Our capital position remains well above the regulatory minimum and strong by international standards, despite increased capital requirements imposed on the sector in all segments over the last couple of years. This strength also allows us to meet any new requirements, capitalize on any business opportunities that may arise, and allows us to manage through extraordinary situations such as the recent NDX. Turning now to shareholder returns, we continue to see fluctuation in the share price in line with the volatility that we're experiencing in the local equity market. Our dividend yield for 2012 was 6.69% compared to 6.48% for 2011. We take pride in the fact that we've been able to provide consistent dividend streams to our shareholders over the years. And now just taking you very quickly through our Q1 results for this fiscal year, which were released yesterday. we had another strong quarter, posting net income of $2.72 billion, reflecting an increase of $73 million over Q1 2012. Net income was up due primarily to higher net interest income, resulting from careful spread management and growth in business volumes. We also saw higher foreign exchange trading income and insurance revenues during the quarter. The earnings per share ratio for the quarter was 84 cents compared to 82 cents for the same period last year, while our return on equity declined slightly to 16.12%. The board declared a dividend payment of 40 cents per share for the quarter, up from 37 cents in the same quarter last year. Turning to our assets, total assets grew by $26 billion, or 7.9% between 2011 and 2012, and further grew by $17 billion in the first quarter of 2013 to close at $375 billion at the end of January. The significant growth in 2012 was driven largely by a $22.5 billion growth in the retail and commercial loan portfolios, while the Q1 growth was reflected in cash resources as our deposit book grew in the quarter. We've had steady growth in our equity base throughout the years as a result of the internally generated profits. Our equity stood at $65.2 billion as at January 2013. This strong capital base supports the risks associated with our diverse businesses and gives us the ability to capitalize on any feasible growth opportunities that may arise. So this, ladies and gentlemen, was a summary of our fiscal 2012 and Q1 2013 financial results, and I'll now call on our President and CEO to say a few words. Please welcome Bruce Bowen.
Thank you, Jackie, and good morning once again. I again want to extend a welcome to all of our shareholders to this 2013 Annual General Meeting. As many have said, the first time we have held it outside of Kingston, first time obviously here. And it's my pleasure, building on the comments on the financial results that Jackie made, to speak to the successes that we had in 2012. Notwithstanding the challenges we faced, it was a very successful year. We achieved a number of key achievements. During 2012, we enjoyed spectacular loan growth, over 20% through the year. And what that means is we have been successful in trying to support businesses to grow their business, to support individuals in acquiring assets. We also launched a new deposit suite, a package of deposit products with incentives that allowed people to meet their varying needs. The suite was designed to promote consistent savings, wise spending, and effective management of banking costs. Within 9 months, there was a 40% increase in the number of new customers that were joining the bank using that new account suite. We continue to optimize the use of alternate channels to deliver services so that our customers would have more convenient options of interacting with the bank. We installed over 200 new and environmentally friendly automated banking machines with new locking systems, enhanced security, anti-fraud security technology. Foreign exchange functionality was introduced on Scotia Online, and we enhanced our suite of merchant services and CMS products for businesses through the year. I'm also proud to note that we have emerged to become a significant player, a more dynamic player in the small and medium-sized enterprise market, which is accepted as being an engine of Jamaica's growth. Over the year, our SME team partnered with a number of different groups, the Medical Association of Jamaica being the largest one. We rolled out workshops in order to allow small and medium-sized businesses to increase their capacity to manage their business. In addition to the bank, our subsidiaries recorded strong achievements. Scotia Jamaica Building Society saw a 40% increase in new mortgages booked, and our market share has grown over the last 2.5 years from under 9% to most recently over 15% market share, something that we're very proud of. Scotia Investments continued to lead the unit trust and mutual fund industries with over 50% market share. Our newest mutual fund that was launched, the Scotia Premium Money Market Fund, surpassed $1.4 billion in net asset value after its first year in the market. Our capital markets unit, one of the newest divisions of Scotia Investments, had over 40% of the market in capital markets activity last year, closing over $500 million in transactions. Scotia Insurance recorded over $4.1 billion in new premiums, the highest volume in its 14 years of operations. The company is also the top-ranking approved retirement scheme with its Scotia Bridge product, now having over $2 billion in funds under management. We also launched 2 new life insurance products, Lifetime Security and Life Shelter, in keeping with our strategic focus of building out the product range in life insurance. And we continued to solidify our position as the #2 insurance company in Jamaica based upon gross premiums. I also want to note as well, moving into its second year, Credit Scotia, which is our startup subsidiary that is focused on delivering simple financial solutions for micro-business sector, and it's something that we see as having huge potential down the road. Ladies and gentlemen, we would not have achieved our business objectives without a strong performance culture and a focus on customer satisfaction. We're pleased to the fact that third-party reporting surveys done continue to show Scotiabank leading the competition in terms of customer loyalty and customer satisfaction. Because in the end, notwithstanding everything we do, if we cannot continue to provide a quality customer experience, we will not be able to retain our position in the marketplace. Our chairman, Brian Porter, spoke earlier about the work of our foundation and our Bright Futures program. We're extremely proud of the various projects we've supported, and particularly proud of the fact that over 50% of our employees, 1,400 employees, were actively involved as volunteers with the work of the foundation in 2012. Let me highlight some of the awards that we won last year, and really are testaments to the quality of the team we have and what we've been able to achieve. During the year, we achieved the gold medal for the best mid-size contact center in the Americas region, gold medal for the best sales professional in the Americas, and silver medal for the best customer service professional, and that was awards from Contact Center World, the leading awards for contact centers in the world. In addition, Global Finance magazine declared Scotiabank to be the best emerging bank in Jamaica, the best foreign exchange provider, and the best internet bank. And Euromoney magazine also awarded us best bank in Jamaica. On the corporate social responsibility side, Scotiabank was declared the most outstanding contributor by the Salvation Army, and our support for environmental activities placed us in the leader category of the Jamaica Environmental Trust Recognition Program. Scotia Life was the winner of the 2012 Bank Assurance Production Member of the Year Award, and we had 13 members of Scotia Insurance qualified to attend the $1 Million Roundtable, which is an industry-wide awards recognition for the insurance industry. All of this only comes because of the quality of the team we have, and I'd like to applaud all the members of our team for their real stellar performance last year. Turning to 2013, and it has been all the talk in the press, but certainly 2013 is going to be a challenging year for Jamaica as a country, for the private sector, and certainly for the financial sector as well. The Bank of Jamaica is forecasting continued recession over the coming few months, and if we don't see economic activity starting to pick up, it will have an even further effect on the financial sector through the balance of 2013. In addition to those factors, I wouldn't be able to speak to you without at least mentioning the NDX, the National Debt Exchange, a prior action of the government's agreement with the IMF in their efforts to obtain an extended fund facility. And while we believe that the NDX is an important component of an overall economic program which, if it is completed, will finally get Jamaica on a path to sustainable economic growth, the reality is that the industry as a whole will see a reduction in interest earned on government securities of approximately $17 billion. In addition, as I'm sure you're all aware, a few weeks ago the government announced significant increase in taxes, and that also will impact Scotia Group, but most importantly will impact a lot of our customers and those people that look to us for their financial security. While we work through all of these factors, it's important to recognize that Scotiabank has, for 124 years, remained a strongly capitalized, prudently managed financial institution. We remain the bank of choice for more Jamaicans than any other financial institution, and the institution that the market depends on to keep their funds safe and secure. We are confident that with our commitment to risk management and oversight, prudent capital management, and our legacy of an institution that focuses on customers and builds up its employees, that shareholders and customers will continue to be able to have confidence that their funds are safe with us. To survive in these challenging times, we'll need to pull together as a group of companies, and become more efficient and creative. And we'll need to collaborate more. Our strategy going forward has 5 pillars to it. The first one is to focus on our high-performance culture. We have become the most consistently successful financial institution in Jamaica because of the culture we've developed